Most traders think they know gold, but they're playing checkers while the market makers play chess. This strategy is not just different, it challenges everything you thought you knew about price action. As we navigate the markets. All right, so when I talk about the market maker cycle, I'm talking about W formations that I look for. Remember, we're trying to trade the market whenever we identify traps in the market. All right, so we wait for traps and enter the market. Right now, most retail traders, get trapped, with these retail trading strategies that, a very large number of traders use. Okay, so the two types are very simple. This is where we've got the first leg of the W formation, right? Where we've got the first leg and we have the second leg lower than the first leg type of W formation that we look for. Why do we look for this? A place just below that market structure. That's how most retail traders trade. All right, so this second leg being lower than the first one, this shows us a clear hit of the stop and a move away. All right, so this is a nice W formation that I look for, right, just because of this analogy behind it. And the second one is when we've got the first leg and then the second leg does not go below. So a nice one, right? And we use, TDI to confirm these types of formations. But in this example, this is what we're talking about. So as you can see, this is what we look for, right? For this strategy, this is what we're going to be working with. All right, so what we usually have after the peak formation, we've got one level of rise, all right, and then the dealer pulls back, gives us another push up, giving us a second level of rise. Dealer gives a pullback, and then we have third level of rise. And as you can see in this case, we have another peak formation, right, where the second leg is lower than the first, right? And I did say we use TDI to identify, any divergence when we see such, right? So this is basically what we're going to be working with, right? Whenever we open up any chart or any gold chart, right, we want to understand which cycle the market is in, right? This will help you, make better decisions. All right, so for the Fib, guys, I've been getting questions from you guys on my Fib settings, and, it's not really anything crazy. Basically, what I've done here, I've removed everything else, right, and left these four levels rather, right, because I'm only interested in the 50% and 618 Fib levels. So I don't really, need the other stuff. Right? So this is very simple. When we identify a first move to the upside, right, what we want to do is we are going to be using the Fib, right? So what do we do? In this case, remember, this cycle can be identified in your intraday charts or intra-swing charts, right, or intra-week charts, right? Meaning you can identify this in an M15 time frame, or you can also identify this in a daily time frame, weekly time frame, H1 time frame, H4 time frame, right? So key points here in this case, we are going to say, we are going to be looking at this example from the H1 time frame, right? Just for this example here, right? So let's assume this is our H1 time frame, right? So what we want to see is when we identify such a move where the dealer gives us a peak formation and a long sustained run to the upside, what we want to focus on here basically is this low, right? That, before we had this long sustained run, and the high where we had the reversal. Very simple, right? So if you get your charts, basically this is what you want to do. From the low to the high, right, of that cycle, of that long sustained run, we wait for a pullback to the 50 and 6180 Fib levels. Very simple, very simple. So, we then look for peak formations, which, we'll cover later on into the video, all right, at these areas. But this is where we expect to see the market tap into and give us a trade to the upside, right? This being our second level rise, we apply the same rule. Remember, we are assuming that this chart is an H1 chart, right? So if we pull the Fib from this low, right, in this case, we are assuming that each long sustained run is a day of rise. So one level of rise or one level in the H1 time frame is a day of rise. So from this low to this high where we had the reversal from that long sustained run, we wait for price to come back into the 50, 61, 80, right? And then same applies for the other side as well if you're looking to sell, right? Very simple, not complicated, very easy for, anyone to understand and, incorporate into their own trading system, or, just focus on this only, right? With the right patience, you'll be able to, make the strategy better and stick to high probability trades only, right? So those are the key points for this, right? We spoke about the cycle, the market structure, right? And, selling to buy or buying to sell. So basically, this is a very simple concept where if we identify an up phase, right? If we identify an up phase, what we are waiting to see is for the dealer to sell to buy. So that basically means we want to see a reversal, right? That's all. The dealer has to sell to buy, right? So people, when they see such moves, right, a lot of people have FOMO in the market, right? They cannot let this go. So you have a bunch of traders, getting involved into the market in this area. And what we want to see is the dealer selling so that he can buy, right? So that's basically another key point right there, right? And then we also look at traps and stop hunts, right? And the right sessions to trade. All right, so let me clear this up and then we can go on. All right, so if we are looking at an M15 time frame, be it an M5 time frame, remember it's all about understanding the market structure, right? And understanding what is pushing price, meaning you want to be very good at identifying order blocks that are in control of price. You want to look for those and get very good at spotting those, right? So it's very simple. Remember, I spoke about the traps, right? Or the types of peak formations. First one is when we've got the first leg, second leg being lower than the first one, a nice peak formation, or when the second leg does not break below the first one. Right? So this applies for the M side as well, or sell side. First leg, second leg. This one shows us a very, clean, clear hand of the dealer. Stop loss is hit, price pushes away, or we have something like this that still qualifies as an order block as well. Right, so these are the types of things that we are looking for. Right, could be your H1 time frame. All right, it is a very good time frame to actually look for setups because the risk to reward, makes more sense. Right, because when people are trying to scalp, they tend to play a lot in your M15, M5, M1 time frame, right? Because of not being able to wait for clean setups. Right, so very simple. An example can be if we have such on the sell side. All right, so let's clear this up. If we have something like this where the dealer gives us a peak formation, right? Remember, we are still assuming this is an H1 time frame. Dealer gives us a peak formation and drops. This basically means that we consider this as one level of drop. And if this is the H1 time frame, this can be seen as a day of drop, right? The dealer then ends the day into consolidation and we wait for the next day. Right, so usually what happens, right? Remember, we always look for stop hunts, right? We want to see the dealer get involved in the market, right? Like getting people excited in the market, right? With fast moves, right? Fast moves. I'm sure you've seen that. Fast moves going to the upside, right? And you really feel like, what this is going. You enter the trade and then it sells for the rest of the day, right? The dealers are aware, or market makers rather, that this is how you guys trade. Right, so very simple. Remember what I said, we're going to take the fib. So if this is a drop in the H1, we take the fib from the top, from the high to the low. Right, and I did say in this case, we want to see the dealer buy to sell because this is a sell example. Right, so very simple. Right, the dealer has ended the day, gets into the new day. Right, this could be Asian session and the dealer doesn't do much. Right, the dealer is just playing around those areas, but remember, for our strategy, we know that we want to take a trade on these areas 61, 80, 50, and what usually happens is at the end of Asian session we have a stop hunt, right, to get people involved in the market, and this we can expect at such an area, right, at the 50, 61, 80 area. This is where we look for a peak formation or whatever entry point or entry triggers that we have. Then we wait for another day of drop. Very simple, strategy that you can actually use to trade gold. On this gold trade that I'm currently in, I've been holding this since last week. I took the trade. Remember, if we are in a buy phase, we want to make sure that we take the trade at or near the low of the week. In this case, I have the H4 chart open, so we are looking at intra levels and intra trades. Right, so as you can see, this entry, the first entry, was near the low of the week. Right, so this applies for intraday as well. If you're going to be trading, you want to make sure that your buy position or sell position is close to the high of the day or low of the day at that moment. But this applies for higher time frames as well. All right, so as you can see, we entered that trade, and on this trade that I currently have right now, which I have been talking about, right? If you did not watch the previous video, you should see the link pop up in your right corner, right? So you can just click on that and check out the video and see how we've been trading this, looking at the market, and how we actually took this trade. So this is a nice trade that we took last week on gold. Right, I even shared this in our Telegram channel. If you're not part of that, do find the link in the description below. Remember, this is our only Telegram channel. Any other channel is not owned by us, so be very careful. Right, so this is our original channel, but use the link in the description to make sure that you don't find yourself joining the wrong group. Right, so this is the entry. This was the entry actually. Right, wasn't risking much, and I'm going to be explaining the reason why I took this. Right, but as you can see from this point when I entered this, it never came back, never looked back. Right, very nice. And what we can identify as peak, level 1, level 2, level 3. Right, a nice cycle run going there. Nice cycle run. I've even because I always preach that you have to make sure that you pay yourself. So this is a withdrawal from that, close some and withdrew some money. Okay, so if we look at this, right, very simple. As market was ebbing and flowing, we had this rally, base, rally. Right, so in this case, it means I was focusing on this low and the high, right, before we had the reversal. And this is your H1 time frame, right, before we had the reversal. And as you can see, what we can identify is the dealers sold that they may buy, and this happened at the 50% fib level. And as you can see, that trade has been shooting to the upside. Right? That trade has been shooting to the upside. For my BTMM traders, very simple structures that we could identify on this. Right, so if we look at it from the H4, this is what we can see. All right, this is what we can see. A nice movement below the 13 EMA, which is the red EMA, and a trade. And we can also identify a trap below the 13 EMA and a continuation to the upside. Right, remember, keyword trap. We wait for the dealer to trap, and as he jumps in, we are in with him. So this is what we had basically. Very nice entry that we had right there. Now, if you're going to break it down, remember when I took the trade, it was in the M5. So if we look down here, this is where the entry was, rather why I took this trade. Right, from this area, remember we had a push going up. So for me to confirm this peak formation that we had, right, I waited for a push up, which also broke structure. So we had a break of structure right here. And what did I do? I used the fib, right, from the low to the high. This is where the market got back into 50, 61, 80. And as you can see, that is where I took the trade. Right? Very simple entry strategy that if you master, you'll be able to, make good money. So this is what we had. The risk was good, right? I love the risk because this was also an area where this previous supply area was now being tested as demand. So that's another factor of confluence. And you can also identify a W formation below the 50 EMA, and we continued moving to the upside. So if you move down to your M5, this is when you actually see that, okay, you had your entry right there before we had this long sustained run. I mean, these are the type of trades that you want. You don't want to find yourself, having FOMO and, doing a bunch of whatever at these areas where you see a big candle and you're trying to sell, and then this happens, you're probably taken out. No, right? You want more precision, right? So that was going to be a very nice entry if you knew what you're looking for. And then in the M15, this is a trap below the 200 EMA. And what can you identify? A bullish engulfing candle, right? This is a bullish engulfing candle. So this was confirmed. Here's another bullish engulfing candle, and it continued going up. So this is the reason why we are in this gold trade right now. I love the trapping structure that we have going on right now here, but I'm not really gonna trade that as we have a lot of bank holidays today. So probably market will be better tomorrow or Wednesday. I will be waiting. All right, guys. Hope you guys learned something from this video. Don't forget to leave a like, leave a comment, and share with your friends.